Alright, everybody. Happy Saturday. It's October 7th, 2023. And I want to dive right in here and look at the markets. So, that's our website. Uh, check out our daily reviews, check out our products, check out our talk here on systems. And yeah, just check it out. And, the terms over here. This is trade at your own risk. This is not advice on how, or yeah, this is an educational program. We're not instructing you what trades to take. Trading is your own business, and yeah, enough said. Let's flip right into the automated trading systems, which the Dow has actually pulled back here in the recent day or two. Um, it's fine though. That's our recent peak equity after our trades uh, uh, trade themselves. It's an automated trading system. And the latest 10.6 was Friday. So those are the trades. I don't think there's a winner in the bunch. There's one break-even trade. So it is what it is. On the all-in for 15 months or thereabouts here, it looks just fine. I do continue to explore other systems, so if we come up with something better, we certainly will share. The Russell, on the other hand, this is a nice pop. So this is just since April, so this is like whatever that is, 6 months. But just here, and we've had a terrible run recently of losses, as you can see from back here. This whole negative drawdown, but in one day it pops back. That's kind of how these trading systems work. So again, 10.6, these trades, I can highlight them better than that. These trades can be amazing, so that negates a lot of losses. And that's what it looks like on the all-in for that same about 15 months. Then the NASDAQ, we've had recent peaks, which is great, but here lately it's been really pulling back hard. So I was really hoping not to repeat something like this, and maybe we still aren't. Maybe it's just one of these, or somewhere in between. This thing needs to start taking back off again. And on Friday's trading, what's that? 2 trades for a net loss. So the reason we do multiple systems is because of diversification. So in the long run, this thing is just fine. This is hopefully a temporary situation. It doesn't pull back any worse than it did back here, and that's what we got there. So let's flip over to the Thinkorswim and look at the S&P 500. On purpose, I am not looking at the overnight action with the ES. We can flip it over there maybe, but the the big push off the bottom here. So this is, I don't consider this to be a done deal yet, but we do have bullishness over here on the EMAs. We did have consolidation in the lower zone, and we did break out above that. So now this is probably going to pull back somewhere in this neck of the woods before it has a chance to really take off. You got this whole body of this candle to pull back really without then this consolidation of this whole area can continue to go sideways. So anyways, big update on Friday, really, in the scheme of things, because we've had such dramatic pullbacks lately. So you need to start having something like this if it's going to really start to take. And you can look over here on the weekly. Everything's still, it's green on the EMAs. It's still positive momentum on the True Momo indicator, and we are right above the Harvard line. And you can see we pulled back hard into the Harvard line. And this, I believe, probably meets the. I haven't done. I don't want to actually calculate it, but that looks like a hammer candlestick. The Dow, uh, really same kind of a thing. Came down into what I would consider to be a demand zone. Get rid of that. Um, Big pullbacks and big reversal. We actually, if you look there, they had a Bollinger Band cross reversal back up here, and then it followed up. And that on the hourly chart over here, we had a big consolidation zone that we broke out of. I would say there's a pretty good chance, you know, depending on how this goes, we can fill in all the way up here to 33,864, and then we got to be watching for a break of this pivot. So I don't think that's going to play out in one day or in just a few candlesticks. I think it's going to take a little time. And in the meantime, you can see these EMAs flip, or start to get closer together like they did over here on the hourly chart. You can watch the white line here cross over and under, over and under, over and under till it finally does break. All right, that is that. Flip over here to the Russell, which looks similar, although it is red on the weekly, which is a big indication, if you ask me, that this thing, the actual general markets are going to have a tough time getting out of the way of the Russell, unless we really just start to take off for some reason, some catalyst to the upside that we'll see what happens. But I mean, we could get a V bottom off the bottom on the Russell, and I've seen it before, and usually it leaves a lot of traders behind. The Nasdaq. All right, this is an interesting thing. The Nasdaq did clear the pivots from the previous high pivots right here, which is this one right here. So the Nasdaq still obviously is the one to watch, or the one to participate in. And again, the EMAs here on the daily have not lined up yet, so a pullback from this situation makes a ton of sense. Sorry, looking at some potential for pullbacks, pullback of even all the way to this like 13,280 level. Or to this line right here, the Harvard line, 338, pull back to the 338. So again, these Harvard lines, it's a big deal. They hold pretty nicely. Not all the time, obviously. It's just a trading system. And let's look at IYT, or the Dow Jones transports. They're red on the weekly. They don't look finished on the weekly yet, but we broke that pivot. We really need to get up to this pivot, if you ask me. So oil. Big news in oil lately is how hard it's pulled back. It's bullish on the weekly. We are playing around to possibly cross back below the Harvard line here. Price took off pretty hard from this level, so there's a lot of demand in here. So I'm actually going to be looking for a bounce in oil from about these levels somewhere in this neck of the woods. And again, I'm not going to really play off of it until I see it in the EMAs. So, Alright, that's enough of this, and then we'll flip over to stockcharts.com, and we're going to see a different picture, I think. All that bullishness for one day doesn't get made up. The bullish percent indexes are actually pretty bearish. So we did flip on Thursday on the industrials, and that was worth noting because we got follow through bullishly. But then on Friday, 9% of these went back. We're still on a column of X's though, so we'll watch it. The NYA put in a new O to the downside, but really didn't have to move much to do that, it looks like here. So it actually went up a little bit. The transports up by 14.29%, so that's pretty bullish. The NASDAQ went up by 1.22%, so that's pretty good. The SPX put in a new O to the downside, minus 0.7%, so not a lot, but it didn't take a lot to put in that O because we were already so far down. And the OEX is unchanged, and the NDX put in a new O to the downside. That's a point and figure sell signal, but we went up by 5.41%. So just to clarify for people, it went down enough to put in the O, but then it pulled back up. So that intraday price action on moving around so much actually is what broke that to put in a point and figure sell signal. So there's actually some contrarian in me that says, well, that fact that they put on a point and figure sell signal means this thing could reverse pretty hard. So we'll watch for that, and there is precedent in the charts to fill in those gaps that I was talking about, really. Let's flip that back here to come up here all the way, well, that's oil, the SPX. Fill in like this. This is the SPX filling in, but the Russell has a lot of room to do that if you follow here. So we can get a lot of bullishness even without crossing these pivots and stay fairly bearish looking on a chart. And I hope that helps everybody. So hope everybody has a great weekend. It's football Saturday, so go Bucks.